Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Thursday, October the 13th, 2022. Well, to say that I had a complete understanding of what caused today's tremendous turn in the markets would be not correct. I, like most, was shaking my head wondering what was going on. Difference is that as a day trader, I am not fighting a position, and so I could just continue to trade. And so as a day trader, and I just am going to say, it was a very nicely profitable day, but you had to make switches and you had to change your mindset, but the mindset just remained focused, and we focused on what your signals were, and your signals you take no matter if it was going up or down. So you kind of keep that all in mind when you're day trading. If you were position trading, I'm hoping that you either had stops in place or you were able to take profit before things got really out of hand. So let's just kind of dive in real quickly here to what was going on. What we're looking at continues to be primary C wave down. That's the big picture right now. Primary C wave down, it consists of 5 waves of intermediate degree. I had felt and left this as minor wave 1 for quite some time, but previously it would have been counted as minor wave 3, this being minor 4. Felt it had gone too far, gone too big against what I was trying to count, and therefore dropped the 1 down to here because I believed what was coming in front of us and how it kicked itself off here was pretty much in line with what a serious drop in the market would be. And then, of course, today gave a little bit of confirmation with that nosedive on the CPI data. But there was a major turnaround in the bond market and then the dollar. And that was enough to convince a lot of equity and a lot of options and a lot of people to cover their shorts. I don't think necessarily cover and go long. It was just covering shorts. And it caught fire, and it just tells you, in my opinion, how short the market likely was. So, by the time they shift the whole mindset to, yep, inflation is real. Yep, it's getting worse. Yep, the Fed's behind. Yep, the Fed's got to do this, et cetera, et cetera, et cetera. Now you convince everybody to get out and now to short it. And if you were the one that led the rally in terms of, the rally cry, then as soon as you see that, boom, turn it and watch them all flip. So it's a weird game, but it happens. So I do believe that a short squeeze did take place today, and I do believe that the short squeeze can continue. Let's discuss how and why. If indeed 1, 2, 3, 4, 5, intermediate wave 3 now complete, it's a much cleaner position. It's a much cleaner count. So I accept, and I've had it in my purview, but I just haven't had it front and center. But I've mentioned it a couple of times, thinking to myself, I'm sticking with this because of what I feel is coming. But now that it came and it flipped, and the S&P found strong support at 3,500, well, intermediate wave 3 done, intermediate wave 4 underway. Now, let's take a peek. If this was minor wave 4, intermediate wave 4 should come in larger, much larger, to be honest with you. So we ran this. This is actually for the downside. I'm going to leave that there for right now. Forget it. I'll take it off. I'll take it off. Let's go back, and we're going to put retracements on, and those retracements are going to cover us for what we think is an intermediate 4th wave rally. So we're going to the top of wave 3 to the bottom of wave 3. We're looking for the fib retracements are on the way up in a 4th wave. Most common 4th wave, most common on a Fibonacci basis is 0.382. That sits at 3760 or 3759 accordingly on the chart. So that's about 76 points from where we are. The market can do that considering that today was up 91. It was up over 100 at several points. Okay, so what would be next? Well, first of all, we got to get above the 20. So we got the daily 20, then 3760, then we have 38, and right above that we have the 50 EMA. That would be fitting, fourth wave. But I got to tell you, what it can't do is it can't come above 39. Right now, it can't, 39.05 is where the bottom of wave one is, minor wave one. And that it should not even get close. So 3,800 is kind of a stretch, which is why 38.2% or 38% is pretty much the norm. But it's quick. So is this the top of A? We're going to do a B wave and then we're going to go up. I don't know how strong this is all going to take. Again, tomorrow we have retail sales pre-market. It's options expiration Friday. Also, Morgan Stanley, JP Morgan, and Wells Fargo all report earnings pre-market. So there's going to be a lot to digest pre-market. And I'm going to go out on a limb and say the trend could be set before the US opening. That's a lot coming in, and that could carry it in the opening. And again, everything goes off to the races, because if it's already lined up to buy, it's just going to intensify the whole thing and it just goes through the roof. So a lot going on. And honestly, it could end up being an A, B, C, and we go into some strange thing. There's so many different ways to look at it, and what's affecting it right now in terms of is just market interpretation and its algorithms. So to really determine it should go past this level and then it doesn't, still turns and collapses, brings me to a point. It's like, well, maybe do I stretch certain areas of Elliott to make it, not to make it work, but to make it to fit how the markets are trading today. Right now, I'm looking for 37.60, possibly above. If it gets up to 38.40, 38.50, that is going to be acceptable in terms of the wave count. But I'm not going to start to get hung up, because I'm still looking for a fifth wave down to complete the primary C wave, and it should be a kicker. It should be a total kicker, and that's why I had that other up. So let's take a look quickly on that we could have an intermediate fourth wave. So again, be fluid with interpreting what the market is doing and then putting it into your count. That's why I work with several, because the market is ultimately going to tell us, if I get stuck on one, I'm not going to see the others. So this is my experience over my years. So anyway, so pulling it back out, if intermediate 3 is done, intermediate wave 4, these are our levels. We can do it and still turn and drop in a fifth wave. If we didn't think that we didn't think that was going to happen, right? Then we didn't think this could happen. So both are going to fool you again, and the next leg down will come in. So in the S&P for tomorrow, again, we have a lot going on before we even hear that opening bell. Be aware, take note, have your triggers, have your targets, and have your points where that trade becomes invalidated. So you'll know I'm out and you're moving to the next trade. You don't need to sit in a position and miss the moves. That would be the sin of trading. If you're in a position and it's not going where you think it's going to go, you get out and you go to the next trade. And then that might be, again, in the same direction, but at least you're fresh. Enough said. So we have upside, we have downside. Now, if this is A and we swing down in a B wave, you're going to want to go, I'm going to go over to the hourly chart and do that again. I'm sorry. It wasn't looking very big. If there's today, there's the decline, there's the rally. If this completes A, then you're going to run again the same retracements from the bottom of A to the top of A. I'm not saying it is the top of A, so please don't get me wrong, but I'm showing you this is how you set up your fibs, and then you can look and you can see down. What is for B wave? Well, 382, 5618, anywhere in there, but it should be an ABC. This looks like it's going to be a 5, or it is a 5. So zigzag then. So how low this gets, it's going to turn and likely get itself up to 37.60. A, B, C, projected structure. And now it fits into levels. You can see how it all works out. Again, that's saying if we don't break 36.94 and drift down, then look for these levels and an ABC and right, A down, B up, C down to reach into these zones and then look for a turn again. It'll look similar to that. You know, 1, 2, 3, 4, 5. Now, how long it takes them to do it, I don't know. This is all unrolling pretty fast. So we'll see. I normally wouldn't think that in 2 days, an intermediate fourth wave is all in and done, but it could be. Okay, so that is the S&P. Let's go over and take a look at the NASDAQ. NASDAQ, same deal. I'm just going to start here on the hourly. I will go to the daily if I need to. Here it is. This market looked like it was about ready to just toss. It did toss its cookies early, but then just keep on going. But I noticed that it struggled. I traded that number this morning. It was glorious as it came down. I mean, one trade was big money because it just dropped. And again, it was another situation where Ninja Trader was not keeping up with the amount of data that was being pushed through. So suddenly it was like you get a drop and then suddenly you get another bigger drop. And it's like, wow, okay. So without really knowing what was going on in between. So nonetheless, market drops all the way past. I mean, it was holding pretty much above 10,700 pretty nicely. Slam through that, slam through 10,600, slam through 10,500, ends up at 10,485, and then starts to rally. Gets itself back above 10,600, hangs out, whatever. But it was at that 11 o'clock hour where, bam, somebody needed bonds. Somebody had an opinion in bonds, or somebody did something. Because it started there, it started in the dollar, and the rest is history. And it is kind of Pavlov's dogs type of a thing, because it's mechanically reacting. Oh, bonds just went from being down 2 to being down less than 1. Oh, they're not buying the dollar anymore. They're selling the dollar. Whether it was a Fed intervention or a Treasury intervention or somebody else coming in and intervening on behalf of their own currencies. Maybe because what our Treasury did in giving $3.2 billion to the Swiss to bail out Credit Suisse was that we'll intervene and sell the dollar. I don't know. But the combination of all of that caused this. Underlying everything, folks, nothing has changed. Inflation is still a problem. We got proof of that today. And possibly these banks aren't going to report anything good. But the interpreted signals electronically and technically forced a short squeeze to really take the cake. That short squeeze was something else. And I'm very, very glad I did not get caught in it with a position. I have to say. Now, here in the NASDAQ, a B wave, yeah, would be kind of due. We went from oversold to kind of hedging whether we should be overbought. Then we get a B wave, then we get a C wave up, and I'm looking for it to come there. And somebody say, how? I don't know. I wasn't looking for today with this intensity. How they're going to get it up there, I don't know, but I'll play it. That much I will tell you. I will trade it because there will be tons of money looking for a home, and it might as well be in my area. Now, we have upside targets. We have downside targets for an ABC down. We're looking, if that completes, we'd be looking for another 5 up. If we don't get a pullback and still rally, trade it. We have levels on the hourly, then go out to your daily and look at where your moving averages are. And if necessary, go out to the weekly, because I want to tell you, one of the things that I noticed today, both S&P and the NASDAQ, was yesterday, the market did close below the weekly, or actually last week, so we're coming in all week with it. closed below the 200 SMA. But then today, it's heading back for it, and it was like getting close to get back above it. Tomorrow's Friday. If they get it and close it above, it may set the tone for next week. It may set the tone for earnings. Technically, you're going to set the tone for earnings. I don't know. Just saying. Take note of these things. For tomorrow, if they break it above 11,200, that's where it is pretty much. 11,225. They break it above that, it's going to really pull a lot more short covering or just reestablishing longs. Now back down to that hourly chart. So I can't say for certain what, because that 1,200 is all the way pretty, 12,000, excuse me, is pretty up there. But we would have to surpass that, and that would just really blow the count. So again, another thing that we're looking for, intermediate wave 3, intermediate wave 4 should find its terminus within the price territory of the fourth wave of a lesser degree. That's minor. So here it is. We're already past that one. So we're inside it. And now could we get up to this low? 11,300? Sure. Could we reach that top? 11,700? Could. Am I expecting it? Not necessarily. But remember, it's an intermediate wave 4, not a minor. So looking at that, if you put it on a little bit different scale, it's not that bad. See, there's the third. We're looking for the intermediate fourth to kind of possibly come up into here. So, but it's got to get past all of this, and it still has to do a B wave and then a C wave. So remember, intermediate, A, B, C. For tomorrow, we have an options expiration, retail sales, and JP Morgan, Wells Fargo, and Morgan Stanley reporting earnings, all pre-market. As I said, over in the S&P, same deal. Direction and trend may be set before the opening bell. Depends on how everything gets interpreted. And I'm going to leave it right there before I go on too long. And our next update will be on Sunday, October the 16th.